Hello, hello, everyone joining. We're going to give a few minutes just so everybody can get in, and then we will start our discussion. Melanie, I love that you left the birthday sign up again.
Like it's. I'm sorry. I thought this is not good. I tried to spin around, and what's on this side is weird. So.
Nope, leave it. I love it.
I think you have to leave it. What you're going to have to do, though, is just explain it, because you're going to have, like 60 to 100 people here wondering, like, should they be wishing you happy birthday?
Well, they can. I'll take it.
Yeah, right. Right. All right. As we like to say, the popcorn is still popping a bit here. So we'll let that keep going and then get started in just a few minutes. Okay, actually, we're starting to slow down, so why don't we go ahead and get started? So first of all, thank you to the two of you for being here. We'll do intros in just a second. Thank you to everybody that has joined and is listening in. I think we have a pretty fun and relevant topic to discuss. Whatever we titled this in terms of, marketing in times of uncertainty, I think we're going to cover a lot of stuff as we kind of prepped and discussed yesterday. Really excited to talk to the two of you about all of this and about the marketing organizations you run and how some of the things that we see happening at a macro level are going to be hitting the businesses. But before we get too far ahead of ourselves, maybe you can each go through, give an intro, who you are, what your role is, what you do, the company you work for. I think that would be helpful for everyone.
Sure, I'll start.
Yeah.
I'm Melanie Taylor. I'm the Senior Vice President of Brand Marketing at Inspirato, a luxury travel subscription company. And I have been with Inspirato for about 6.5 years.
Love it. Okay. Love it. And I'm Corey Vasquez. I'm Chief Marketing Officer at Realty One Group. We were founded out in Las Vegas during the COVID pandemic. We just went sort of virtually everywhere. So we still call our home Las Vegas, but our teams are sort of all over the country right now. We are about 18,000 real estate agents, 49 states and 9 countries.
Okay, so we've got real estate and we've got travel, and we're talking about all things economics. So should be good discussion. And Melanie, I just feel like we do have to address the birthday situation. So did you want to tell everybody what's going on?
Well, so today is not my birthday, but it is next Thursday. However, the sign, we haven't been in the office a lot, and the sign is from August of 2019, and I just don't take it down because it's people are new. They can think it's my birthday every day, and I accept all wishes. So thank you.
Love it. Happy birthday, Melanie.
Yeah, that's right. Happy birthday next week. Anybody who wants to wish Melanie a happy birthday can chat it in. Okay, so for all of the people listening, a couple things and some just housekeeping for you all. We're going to talk probably for about 40 minutes or so. This is interactive. We'll send some poll questions to the group. So if you're listening in, of course, you can answer those. And then throughout, if you have questions, Q&A, please throw those in the chat. We're going to reserve probably the last 10 or 15 minutes to come back to those and answer them. So if we don't answer them right away, just know that the time is reserved at the end to do so. So with that, we are going to launch our first poll question that we want everybody to partake in. So I'm assuming the poll is popping up. You should see it right now on your screen. I'm going to read the question just so everybody knows it. But as a marketer, when you look at the macro environment and you think 6, 12, 18 months ahead, what do you believe? And there are a few options there that kind of address the severity. We only have one person who said they have no idea. They didn't think this would be interactive, and they just are here because they said there'd be prizes. So we got one of those people. So some good questions, some good answers are coming in. 55% participated. Let's try to get that up. If you're listening in, throw something in there if you can. All right. I'm going to go ahead and start to talk about the results on this first question before we launch the second one. So what we're looking at is the first answer was the skies are blue. No big deal. Nothing is lying ahead. 0% of people think that. 63% of people are saying there's some headwinds and there are some hurdles, but they're feeling confident. 30% are saying that a recession is coming. It's time to get prepared. and 2 people are here because they thought there were going to be prizes. So it looks like about 2/3 of people are thinking that there's going to be some hurdles ahead. 1/3 of people are saying, no, it's here. This is going to get bad. So we're going to launch one more poll, and then I'm going to get the 2 of you to kind of think about these same questions. So let's go ahead, throw up poll question number 2. So based on that previous answer, curious what people, what marketers that are listening in right now, what actions are being taken? No action, reevaluating, or changes that are already in place. Okay, things are coming through. It's looking to be about the same. Okay, a little bit of a difference here. So the majority of people are saying that they're reevaluating their marketing activities, but they haven't done anything yet. So that means they haven't changed budgets, they haven't cut programs, they haven't sidelined initiatives. Then it's split about 20%, 20% saying no action has been taken, business as usual. And the other 20% are saying, no, they've already cut programs, cut initiatives, things like that. So that's what we've got. A kind of a split, 2/3 of people thinking things are going to be troublesome, 1/3 of people saying it's already here. Mixed bag in terms of people taking action. Now coming to the 2 of you. I don't know who would like to start, but when you think about these questions, when you as an organization are talking about this stuff, what do you see in the environment? Let's start with that one. What do you think is going to be lying ahead? Corey, you're nodding. Let's go with you.
Yeah, I mean, I think definitely depends on the industry you're in, right? So we can look at the economy overall and the markets overall, but certainly the industry, and I think Melanie and I are in those unique industries right now that are being impacted. So we actually saw this coming about March or April. We had a big convention in April for our real estate industry, and we're like, oh no, like things like tides were changing already. And so we've already reestablished, changed budgets, changed initiative, integrated some programs together, launched some new programs, all in order to kind of curb what we had saw coming about in April, which is now hitting us very hard. So in the housing market, we're down about 20 to 25% transactions across the board. And we all know real estate's local, but that's across the board. So every market you're seeing down in transactions. So we've done a lot already, and I won't go into too much detail. We can talk about it. I think Adam, you've got some questions coming up, but definitely started that about 2 to 3 months ago, and we're right in the middle of it. So it's been interesting.
Now, real fast, before we jump to Melanie, can you help us understand when you're talking about transactions? Because as a brokerage, you probably are trying to get more brokerages open, but are you talking about actual home transactions, the selling of brokerages and franchise ownership? What's that mean when you say transaction?
Yeah, that's a great question. So our franchise sales are sort of on par. So we have 2 audiences that we really think of. You would think as a real estate company, we're looking at buyers and sellers, but our primary audience is real estate agents. So we're an office, we're a home for real estate agents. We try and recruit amazing real estate agents to our offices, and then we try and open up new offices, like you said. So we have about 400 locations now in the country. Our franchise sales are still going pretty well. So meaning there are entrepreneurs out there looking for opportunities to open business like ours, and ours has been very successful. For the real estate agents, though, their transactions are down about 20% to 25. And that's because mortgage rates went from about 3.25%, which, by the way, unbelievable rate to buy a home. And it was that way for years, but we've seen mortgage rates as high as 18% decades ago.
Wow.
So, yes.
Oh,
exactly.
You mean yeah. And in history.
So our parents, our grandparents probably bought their homes. They were probably at 15, 16, 18%. So we were at 3.25% for a long time. It jumped to 5% as the economy tried to adjust. And by far, home sales were out of control anyway. So home prices were out of control. We had a lot of buyers who couldn't get in houses. So it's adjusting, which I still think, and we can talk about this more, is good. But when I say transactions are down, that means our agents are doing 20% to 25% less business right now.
Gotcha. Well, we're going to come back to that follow-up of mine. Melanie, let's jump over to you. All things travel, specific luxury travel. I could see this in a couple ways, right? Does luxury kind of sit in this world of, possibly individuals that don't feel the impact, or what's that kind of look like in your business?
That's definitely true. We have the affluence of our market kind of protects us. Like some people will call it recession proof sometimes. However, the cost of everything to operate our business has obviously skyrocketed. So I would agree with Corey in the sense that we definitely were feeling this, even though our business in terms of people wanting to go on vacation is very high. It actually never slowed down, to be honest with you, during the pandemic. And I would say that right now we are benefiting from a rebound in travel just because of pent up demand during the pandemic. So despite the cost and feeling the pressure and a looming recession or that kind of talk, people are like, forget it. I've sat at home for 2 years. I'm ready to go. But the operational side of our business continues to get more expensive. And that's where we have to start considering how we, operate when it comes to like marketing budgets in particular, and just watching how we're targeting people. But the demand for a vacation has not, that hasn't happened yet. Like the decline has not happened yet.
So real fast, if you can, just so we understand the business model a little bit, the cost of running your business, can you give us a couple of those line items of what you mean when you say that, for what the model is?
Absolutely. So at Inspirato, we have our own private collection of luxury vacation homes. And so that we individually staff and manage. So all of our homes need maintenance. We have on-site concierge, housekeeping staffs, all of the hard goods that go into our homes. So, and labor is a huge part of the business and hospitality. So, and in that specific area right now, those type of jobs, they're, the availability of workers is so much lower than it was pre-pandemic. That puts a squeeze on us there as well.
Gotcha. Thank you. And so what does that mean from your programs, your initiatives? You've got kind of similar to what we'll get into here. You've got almost conflicting data sets, right? There's all this demand. People still want to go. Vacation interest is really high. Cost of business to run the business is going up right now. So what does that mean you're doing from an internal marketing standpoint right now?
Yeah, we're really looking at diversification in general, who we're targeting, different ways of adjusting our product offering a little bit to focus more on short-term communications versus long-term, not so much like from a media perspective, but we're talking about this being a short-term commitment versus a long-term. We sell luxury travel subscriptions. So subscription to most people is month to month, but historically we've gotten a lot of interest for longer term commitments. So you can plan out, into the future. And so we've adjusted our messaging a little bit to reflect more on a lower risk, shorter term decisions.
So you're kind of, my words, not yours, you're allowing people to kind of have the out, right? If things get worse for people, but that's a big change in messaging. Yeah, they want, exactly. Don't want that, but you're giving them that option. Sure. Okay. So then how in both of the businesses, right? Because you turn on the TV any day, there's another talking head, there's another headline with a lot of conflicting stuff, right? In some areas you have inflation is at a 40-year high, but you also have consumer spending is still up year over year. You have unemployment rates that are at the lowest they've been since pre-pandemic. So people have jobs, people are at work, but then you have everything becoming more expensive and rates, to your point, going up, Corey. So I'm curious, when you are looking at both sides of the coins and kind of the conflicting data, how do you pick the data that you're going to follow, that's going to guide you? And a follow to that will be, how is it adjusted any internal KPIs or milestones and metrics that you've adjusted because of that?
Go ahead. You can go,
Corey, back to you.
I was going to say, I'm a classroom girl. You're going to have to call on me. I don't just.
Okay. All right.
Yeah, let me start with the buyer seller, because even though they're not our primary consumer, but yeah, they're getting inundated with, tomatoes are more expensive and eggs are more expensive. And by the way, a home is more expensive. And so I think overall, that's why we're seeing transactions down, is they're nervous. And that in the media, I've worked with media before, I worked in media before, and you've got to report the news, but they're not seeing all the news the way we are as a real estate industry. And like I said, a lot of the buyers in the last 3 or 4 years have been priced out of neighborhoods that they really wanted to get into, or they were in bidding wars for a home, right? And now that the market's soft and what we would kind of consider stabilizing a little bit, they might be able to get back into that neighborhood that they wanted to. They might be able to put in an offer on a home at a reasonable price and get that house now. So we're trying to get get that message out to buyers and sellers, because that in turn drives business to our agents. But I'll answer it this way, Adam, is we believe in our business model. We believe in our core values and what we're offering. We offer agents 100% of their commission, meaning when they sell a house, they get 100% of that commission. They give us some fees to be part of our offices, but we believe in that 100% commission. And we're messaging to them now when it's challenging, like it was in COVID. Now is the time you want to be with a shop like ours. It's 100% commission. We give you the tools, we give you the coaching. We're impressing upon them, get more coaching so that you learn how to generate more leads right now. All those tools we have for them, and we just continue to push that message out to both them and to the buyers and sellers.
So is it, I mean, from a message standpoint, then, I mean, you're kind of sticking to that core of here's what the value is in terms of Realty One and what we offer and what we provide to those agents. And you're kind of not doubling down, but you're staying the course versus trying to get too creative of does a different type of message work or resonate.
Yeah, because I think when you get a little bit too creative and you try and kind of go a different direction from that, then when the market changes again, you're going somewhere else, right? And you start to your audience. And because we're talking to a lot of marketers out there, we have 6 C's that are our core values, and we really just start to highlight those given different markets. So right now, commissions and coaching are the 2 that we're really putting a lot more emphasis on. But those 6 C's are always there, and they're the foundation for what we do. So I think creativity is great in certain places, but definitely not when you're trying to pump messaging out.
Yeah. What about you? What's happening in Inspirato on that, Melanie? How do you kind of balance all the different conflicting data? And then what do you kind of pick, and how does it change any of the business metrics?
Yeah, I don't think that we're changing our business metrics. You know, we went public in February, so we really don't have that luxury, to be honest.
You don't really, exactly, yeah. You don't want to change guidance, right?
That's correct. So we are definitely still, hitting our goals. Like I said, I think that the adjustments that we've made are, pulling different levers that might be out of pocket cost lower, and we've changed our messaging. Interestingly, we're kind of in a real estate business too, because we go into these long-term leases with homeowners for their homes. So there's been a tightening in that market. So this is maybe an opportunity, as Corey just outlined, for us actually to invest more on the supply side of our business too, as those numbers that we don't typically look to as much change.
Okay. We've been talking macro. I want to come down a couple levels here, get into the marketing side of things. So some questions there. As I was thinking about both of your businesses here for the last couple of days, the marketing brain started to lean into just the consumer. And it's, we all went through, I think, the 2.5-year period of coming to grips with, maybe we don't know as much about our consumer as we do because the consumer was changing so much. And because there was all of these new behaviors that were being adopted or kind of introduced that as brand marketers, we didn't necessarily know they existed before. And we did that for, 2-3 years, what feels like an eternity. And then we kind of get this light at the end of the tunnel, right? And we're like, okay, like we're going to get through all things pandemic. And now we get to face this. And I'm just curious, like from both of you, when you think about the individual consumer, how's it changed in both of your businesses? I even to the, whatever you want to call it, the demographic, the psychographic, how has it altered going back to pre-pandemic and then up to what we now, both believe we're kind of facing? And we'll start with you, Melanie. Corey, you will wait until your classmate goes.
Thank you. I think that our consumer at the core doesn't change so much. We still have a affluent audience that you have to have just a limited amount of income to just to afford the nightly rates. Honestly, it's just not cheap. However, as I mentioned before, there are 2 big things that changed because of the pandemic. One is you can work from anywhere. And so we've seen a huge uptick in how people use Inspirato we used to always just talk about vacation, and certainly that's the core of our business. But now people want to leave to work, right? I mean, it's not just for vacation. So there's more of a psychographic small shift there in how we talk about the ways that you can use Inspirato and leverage your subscription. And then the other thing I mentioned earlier is just managing the risk opportunity for the consumer. We used to not really consider that in the sense of a long-term commitment versus a short-term commitment. And I think what the pandemic did, again, more psychographically than demographically, is that it made people just shorten their planning window. Like nobody is guaranteed that in 2 years, like I'm not going to count on going to Italy in 2 years. Who knows what's going to happen to that war? What's going on with the EU? You know, is there going to be any energy supply? So people are making much more shorter term kind of big ticket decisions than they were before the pandemic. And that has changed just again, how we message our products.
Now, do you see that same type of, and are you saying that that exists today as well? Like that, you know, the people are booking maybe now for a couple weeks out or a couple months out because of some of the uncertainty. So what happened in kind of this pent up pandemic, oh my gosh, will we ever travel again, is now being released, and you're seeing those short windows.
I would definitely say that was true in January, February.
Yeah.
I think like as we've moved through the year, that's also just seasonal part of travel in general. I don't know that it's completely unique to Inspirato, or I know it's not unique to Inspirato, but we definitely saw more people, like as the doors opened up, once we got through the Christmas kind of spike, and people thought, oh, you know, COVID is over. So everyone wanted to go. So, and they wanted to go in March and April. Like there was a lot of short-term bookings. I think typically in the fall, we see travel slow down in general when you get back to school and more kind of programmed activities. It's harder for people to get away. We certainly would love that. So we're talking about short-term getaways. Don't wait. You know, tomorrow is not promised. We're not saying that, but that idea of making those decisions quicker is certainly still part of our messaging. And it all depends too on our inventory supply, which again, just every fall, it's lighter than it is in the summer or winter.
So tell me about, and then Corey, will come over to you. I'm just kind of curious, right? Every you know, brand marketer, I imagine to some degree you have those personas that float around the office of who your travelers are. You mentioned kind of the people now traveling to work. You know, like, so does that kind of add somebody to your portfolio of who you go after? Has that always been there?
I mean, I think they're the same people. They just have more opportunity to travel. So we diversify our program, you know, our product mix. So we have Inspirato Pass is a monthly subscription where you pay a flat fee and you can travel as much as you want off a list. It's not that simple, but that really targets that kind of mindset that you can keep going and you basically have your travel budgeted for the year, but it allows you to make short-term decisions. So it's more changes in the product offering, and that existed right before the pandemic too. So we've just really evolved that product over the past 2.5 years. So that's one way. And then I would say just like everybody, people just are getting older. So what we definitely were a core kind of boomer Gen X target 5 years ago. And now as the millennials are approaching, you know, mid 30s, 40s, that's, you know, and talking to them is a little bit different, but they still have the same mindset in terms of travel. That's a very family focused traveler, that millennial traveler. And we've been targeting that for years. So it's just a matter of how they spend their time, but they're the ones that are much more likely to go travel, or much more likely to go work somewhere else than say somebody who's 65.
Yeah, it's so funny. We're now saying that the family focused millennial, because I feel like it wasn't really that long ago. You just said the millennial, and now you're starting to realize like, oh, the millennials everybody grew up.
I'm just trying to get over the fact that she just said millennials are 30s and 40s. I'm like, wait a minute.
yeah.
I remember them when they were 20.
Yeah, exactly. Right. They were figuring out this Instagram thing. Okay, Corey. So I'm curious now, jumping over to you, right? The consumer. And you mentioned, so you've got two sides of the business and your franchise business, right? So people buying Realty One brokerages that they stand up has stayed pretty steady. And I'm curious if you've seen the consumer of that, the kind of the entrepreneurial profile change through the pandemic, and then even now as people look ahead. Is it skewing older? Is it getting younger? What does that look like, or how has it changed, or is it just really a demand thing? It's all still there.
Yeah, so I think if you looked at our three audiences, those franchise owners, the real estate professional, and the buyers and sellers, the franchise owners have stayed pretty stable. That's an entrepreneurial mindset, right? I want to own a business. I want to create a retirement. I want to create a legacy for my family. We were named a top recession-proof franchise because of our business model and the way we've kind of formulated this company. So that has stayed about the same. Now, definitely, like Melanie said, they're thinking a little kind of, if something crazy happens again, like a COVID, how are we going to make money? How are we going to sustain? And that's where, being a top recession proof and having some of the tools in place that we do helps them. For the real estate professional, this is where there's sort of a dichotomy. We're messaging out sort of the urgency of where we are right now as an economy, because we know they're going to start feeling the pain and losing those commissions and that, and having their transactions cut. So the more money they can make on each home that they sell, the better. So we're creating this little bit of urgency in our messaging that, like, now's the time. And we're banking on the idea that in COVID, we all learned a lot of change. We all learned how to adapt. We all learned how to change. So we're sort of banking on that. If you didn't during COVID, now's another great time to change. Change is hard for all of us, right? And then from the buyers and sellers, we're trying to create a little messaging that's calming, right? So yes, mortgage rates are a little bit higher, and yes, there might be a little bit more challenge. What I think is interesting about our buyer sellers in the last 4, 5, 8, 10 years, Melanie, you're talking about millennials. I think a lot of buyers and sellers felt like they could buy their own homes online, sell their own homes online. And a lot of platforms and organizations came up to help them do that. We've always said, this is one of the most critical transactions you'll make in your lifetime. You need a real estate professional, right? Who's been doing it for years, who knows the paperwork, who understands the inspections, who gets it all. And I think they're coming back to that concept again. Like, we need a real estate professional, because what does that 5% really mean? And why is that house that wasn't available now available? Is there something wrong with it? So we're really, again, urgency on this side, calming on this side. So the split brain messaging is no doubt a little challenging.
Well, okay, so you said it twice, so now I get to kind of call it out, because it seems a little like counterintuitive. A top recession-proof franchise to own in the real estate vertical as we approach, that seems kind of weird. The housing market, all things housing, like that, right? It's a little weird to hear, but help me understand it.
And you have to put on your different hats. And I love that, we had a question in there, is it not an entrepreneurial risk? You have to put on the different hats. When you're an entrepreneur and you're looking to buy into a franchise, our franchise contracts are 10 years. So you're buying something for 10 years. So when you're looking at your stocks or your portfolios of bonds and things, you're usually not thinking, in 6 months, how much will I make? You're thinking in 10 years, am I creating this retirement, this legacy? And our business model, again, is built on the foundation that we're going to give the real estate professionals more. They're going to have more success, which means as a business owner, you're going to have more success in the long term. So you can weather a 6 month. And by the way, I would have answered that poll at the beginning, like, even though it's hitting the real estate market hard, I see light. I really do. Like I said, I think people are still going to buy houses. The rental business right now is challenging, right? To find an apartment to rent right now is tough because people are scared of buying homes. So I still think it's one of the best investment you can make. But then again, for the real estate professional, where they're at right now, they're saying, I was averaging 4 or 5 homes sold a month. Now I'm down to 2. So I need that. I need to be in a company where I've got the tools that I can do to do my job, but I'm going to make the most money that I possibly can.
So, okay, makes sense. A question for you now, jumping to your agent side, and I'm, this is, I guess, more opinion and not a ton of data, but I feel like in the pandemic, whereas the pandemic was coming to an end, everybody I know became a real estate agent. It was like the ultimate side hustle. And we kind of adopted, right, this like side hustle culture. And so how has the consumer for you changed on what the real estate agent profile maybe looks like for you guys? I'm curious if is that just me, having a certain group of friends that are doing it, or was that very real that suddenly people were like, wait a minute, real estate's going bananas. I can make money. I can get a license, sell a couple homes on the side each weekend, and like, I can't lose. Did it really change the makeup, or am I off?
No, and it really highlights for me, Adam, that I need to get in an industry that instead of ebbs and flows, just ebbs. Or just flows. I don't want to ebb anymore. I'm tired of the ebbing. The housing market just moves and flows constantly, and it's a little bit like Melanie's industry too. So it's tough. We have created a business model. Again, I go back to those UVPs and that business model that we created, where you could be an actual part-time agent and make some money. Because if you're just picture it like a dental office where you have 3 dentists working together and they all pay for the printer and they all pay for the front desk receptionist, they all pay for do we have fax machines anymore? they all pay for the fax machines. That's sort of what our real estate business model is like, is you pay some fees to be part of our office, but you get that full commission. So you could, if you're just doing it as a side hustle, you could sell 2 or 3 homes, you get that full commission. It's really actually worthwhile for you. But yes, to answer your question, Adam, we've seen real estate agents rush in. I had some agents who did the most business of their entire lives, the May and June after, sort of after COVID, after doors opened again, because people were sitting at home that whole time in COVID, looking at houses going, oh, I really love this house. Why am I in this house? Now we're back to that kind of market where I think you're going to see some of those intro real estate agents go, this is really hard. I've got to mine for leads. I've got to call people that, you know, maybe want to buy a house, maybe don't. I've got to really work at it. So you do see a little bit of a flush in a market like this of those who are like, oh, this is easy money, going, no, this is way harder in a market like this. Did that answer your question, Adam? I hope.
It did. It did. I just, to be honest, what I really hooked on to was your reference to fax machines. So the fact that, I mean, I think you are, you know, you placed yourself on the millennial spectrum, if you will, because you still, you know, but that's just.
We're gonna go on to Melanie. You have a question for Melanie?
Exactly. You know, yes. We'll hop back to Melanie. Okay. Another topic, and I want to really I want to root this in kind of all things marketing and media innovation. Right. At the beginning, you both mentioned that I'm going to say you're testing new things. You're trying new things. You kind of said, look, there's a playbook we're sticking to, right? Maybe that's core values and that's messaging and things like that. But there are initiatives that maybe you've adjusted, but other new stuff you're trying. I would be curious, maybe talk from a high level of how you think about innovation within the walls. Right. And when I'm thinking innovation, I'm saying, are there new technologies? Are there new partnerships? Are there new platforms, new relationships you have? How have you kind of thought about that ecosystem that each of you probably oversees in terms of what you dip into and how you think about innovation to keep driving the business forward, especially in a time right now? Corey, you may begin. Actually, wait, real fast. Sorry. I just want a good reminder for everybody. If you do have questions, throw them in the chat. We have a couple coming in, but anything you've all heard, anything you want to get more clarity on, please start throwing them in there. We've got about 8 to 10 more minutes of discussion, and then we'll turn to some of those. All right,
so
Corey,
I
back
think
to
I'll
you.
answer that in 2 ways. One, I mean, sort of subjectively, we've gone back to, I love that you said personas, we've gone back to the audience personas and really looked at like what their emotion is right now, what they're living through right now, and where our messaging, again, where we can use our messaging to really highlight our UVPs on that end. On the other end, when we're talking like actual tactics and strategies, media, digital, those kind of things, obviously we've had to cut budgets to just kind of soften the blow. And of course, probably Melanie experiences this too. They go to marketing is one of the first ones, right? And I always think that's good. To be honest with you all and everybody who's watching, I actually think that's good because it gets us to be very targeted in what we're doing. And sometimes I'm concerned when I oversee the digital department that we're just kind of throwing money at a certain audience group and maybe it's not really doing what it should be, but that money's earmarked for digital. So we've gone back and really looked at every single one of those tactics and said, which is hitting the mark. We're really looking at cost per leads right now, really looking at, where we're generating leads and where we're generating effective leads. And so those budgets have shrunk. We've gotten very targeted. I will tell you this, the second thing we've done is really look at our organic efforts. So meaning our social media and some of the things that we can do better on organically to help build the brand. And one of those things, I'll be specific, is we adopted a platform. We have a great brand. We're really known in our industry for the brand and the marketing and just the beautiful eccentric dynamic nature of our brand. We adopted a platform. We have now 18,000 agents, and we really want to leverage them as our army. So they should be out there, marketing the brand as much as possible. So we adopted a platform where all of our branding and all of our assets go on that platform. They can now customize that as real estate agents, put their name, put their phone number and their emails on there, and really use that on social media, use it on door hangers, use it wherever they do, to really, again, activate that 18,000 agents and let them be the brand advocates, brand loyals that they should be. So all things marketing, but budgets and organic for sure.
Just curious on that, right? Where you kind of are running the franchise model and giving them that toolkit to kind of pick from. Are you also right now kind of helping power that and pushing investment to them? Or, I think there's a lot of discussion around kind of franchise models of ad funds and co-op funds and things like that. Has any of your perspective around that changed to just try to kind of ignite people to keep, contributing or spending on their own behalf, or are you kind of just providing the toolbox and encouraging it?
Well, I think that's interesting because as we look at budgets, our franchise owners are looking at their budgets, right? And so it's interesting. I wish you would have been around 6 months ago, Adam, to light that fire underneath me, because I've had a lot of my owners ask in the last 4 to 5 or 6 months, like, what are we spending these marketing dollars on? So we've done a lot of education on that side, saying, by the way, and they're paying attention, which I love. So when we get media coverage for them, they're like, oh, this is great. When we launched this platform, they're like, this is what I'm spending my marketing dollars on, and it's not happening in other organizations. So this is why I'm here. Great retention efforts, right? Is that opportunity to educate them on how we're spending marketing dollars on their behalf and what it really means. So I've spent the last 5 to 6 months really in an education mode for all of those owners, saying this is what we're doing on a daily basis. Pay attention and model it in your market. And you might need to shift it a little bit, because Boise is different from Miami, right? So take the assets, take the messaging, shift it how you need to, but use it.
Okay, Melanie, I want to jump over to you. Kind of same question, right? Innovation. How is it kind of thought about within the org? How has it changed? What are some things you've done, to kind of, try and test new efforts?
Yeah, I would agree with Corey that there is a focus on limiting waste, I would say, with a very niche audience. It's important that we don't have that. We also kind of operate very similar to a B2B sales organization sometimes, and we are generating leads for our business too. So what we looked at is how this is also kind of bad timing, because this is all happening right on the time that like third-party cookies are going away. So I think most of the way that we're looking at how we spend digitally anyway is it was already on a path of diversification. I don't think that the economic climate really forced us to look at that differently, but we are. For instance, we're investing more in just SEO than we have in the past, because we just relied on, put up a digital ad, the leads will come. And so we're investing in places like that more, but I would argue that our innovation is not happening as much as maybe it should in our media planning, our mix. It's happening more on the business side and diversifying audiences and trying to, not so much consumer audiences, but actually targeting businesses as well. So kind of we're diversifying that way, but I think that the way that we're going to market isn't really under the microscope, with the exception of cut budget, which I don't really share Corey's enthusiasm of that being a good thing. Mostly because being responsible for brand, it's always hard to quantify that anyway. And so those things that don't show an immediate lift or impact often are subject to the axe. So I definitely say
that's a super subject to the axe. Okay. Keep going.
Yeah. So we're just focusing more on messaging, target, and product innovation, more so in media innovation or marketing innovation.
So you probably knew this question was coming. What's it mean for your agency relationships? And I'm curious, right? Like just when we talk about this, right? I think a lot of agencies, ourselves included, we pride ourselves on wanting to come to the table and provide that innovation, right? Provide some of that forward thinking, even when times are, tighter and we need to be, eliminating waste or become subject to the axe. So when you think about the agency relationships you have right now, how are you evaluating them, right? Because those are often deep partnerships, long-term relationships that have been had, and they've been a partner at the table through, ups, downs, ebbs, and flows. So what does it mean? How do you look at your agency relationships right now? And what are you expecting of them?
We actually do a lot in-house too. So we probably have fewer agencies than you would expect. But the ones that we have, I try to always very helpful, but try to hold them on to the next planning cycle. Honestly, there's nobody is like cutting any relationships. I feel like this is always there's always in any economic time, I think there's always a third and fourth quarter kind of push on the budget from a marketing perspective. So it's not new. It might be slightly more drastic this year, but it's not like a surprise. So because of that, and also again, because the vacation industry in general, people plan their vacations for the year at the beginning of the year. So we always front load things we try to have a very active first and second quarter. So there's not a big, huge surprise for our agencies either going into the second half of the year. So it's, I think that there's an opportunity to use their agency resources more for planning. We have a tendency to have very quick turns for everything because I don't know, change our minds. So this to me is like a luxury of time that we can hopefully leverage those type of partners and expertise, especially again, as the market is changing. It's like a good time to do that.
I think it's interesting, right? The nimbleness and the ability to kind of react alongside you becomes pretty important. So interesting. All right, Corey, over to you. How's it look on your side in terms of how you review the agency relationship?
Yep, and similar to Melanie, I think we have fewer partnerships and agencies that we work with. We're sort of fast and nimble and pride ourselves on doing a lot in-house, unfortunately. But I would say in these times, the partners that we do have, I love the creativity. I love the innovation, the creativity. I love a partner who's not always going to the dollar side, right? Well, if we spend more here, we can do more. I love it. And that's because, again, like Melanie said, it's going to be different quarters of the year. It's going to be different years. So if they take a chance on us, understand that, that where the housing market's at right now and how our business is being impacted, and say, okay, we're not going to try and make the next dollar now or spend the next dollar now. Let's see organically how we can help them now. That goes a long way with me, because it's an empathetic gesture of like, we get it, we're in it with you, right? And we know that there's going to be an amazing housing market coming, and we want to be your partner for the long term. So how can we do this? And I've had some agencies who will say, like, let's focus on social media and let's focus on your content, and we'll help give you ideas based on what other clients are doing, what we see happening. And I just love that. That goes a long way for me for a partner relationship.
Okay. Reminder to everybody listening in, if you got questions, we got about 5 more minutes here, and then we'll turn to those. Not a lot trickling in, so if you've got anything you're kind of sitting on, please post it there so we can address it. Here is kind of the final topic for us. You're talking to a group of marketers here, and I'm curious, like, the go-to question would be like, oh, what's your advice to the marketers here, and how should they be thinking about all things? And I want to like twist that question around a little bit. And I'm curious, what are you telling your teams internally right now? What are you saying to the marketers that sit under each of you, as they probably have some concerns or questions, or they're not getting to sit in some of those, board discussions where marketing is getting, evaluated? What are you telling them in terms of their roles and the marketing function within your orgs each? Oh, Corey, let's start with you.
So what I do, I tend to relay a lot of what our president of our company is, Vinny Tracy. He's been around for 40 years. He was at Remax for a very long time. So in 40 years, he's seen every kind of housing market 3 times over, right? And I think his calm demeanor has kind of flown down to us. I take that as, if you're gonna be in this business for the long term, you're gonna see it all. We know that now with COVID. We had no idea that was gonna come. So we've seen a lot. We'll see even more. And so you try and practice that calm demeanor. I also tell my marketing team, this is where we're really gonna prove ourselves, because I don't think, in my opinion, big budgets don't prove the worth of a marketing team. It's when those budgets are cut. And Melanie, I was just putting on my positive hat, but you're right. It stinks. It stinks indeed. But this is where we really prove ourselves. And my digital teams have to get really scrappy. My graphics teams have to be really clever. My content teams have to be really on point. And we've got to do stuff. We're a small enough team where we do events too. We do all sorts of things. And this is where we prove ourselves. So that's what I tell them. Believe in it. Believe in our agents. Believe in the business model. You're at this company because of that, and we'll make it through. We made it through COVID.
Now, just whether they go, get out of the minute through COVID, did we? Yeah.
Get any worse? Just kidding. Never say that.
The good news is we've recorded this. So I'm just curious, I think that's great, right? That message of like, now is the time where marketing actually proves itself, and whether those things, find the light of day, or, they die on the cutting room floor. I mean, it sounds like what you're saying is ideation and creativity and there's no bad ideas in the brainstorm type of thing. And let's see what we can do, while keeping in mind, of course, that we can't just waste. We have to eliminate waste. So is it actually a time for you of heightened creativity from from your team and what you expect?
100%. 100%. And to the extent that I've rallied my team now, so we do team meetings regularly, but now we have even more brainstorming kind of creative meetings. We've created inspo boards in our project planner groups so that people are looking at what's working, what's happening, what are other brands doing again. And that's something that we do constantly, but right now it's pull out all stops, right? Because those innovative, creative ideas, again, that are organically going to push the company forward are going to be the ones that we remember and that really get us through this. So
Sure.
absolutely, a lot more creativity and a lot more doing.
That's great. That's great. Melanie, what about on your side? I mean, what's kind of your message to the crew?
My team is so busy that they don't feel this pressure because, as I mentioned, as we innovate on other parts of our business, I run a creative team in addition to the dotted lines to digital, and we are busy. We have a very what's the word? Energetic CEO that we're always moving on to the next thing. So the message is like, let's focus on those things. This is where the executive team is focused. So don't get worried about climate, specifically economically, or any budget cuts, because we can do great things. To Corey's point, creativity is what we do all the time, but it's a great opportunity to try some of the things that we didn't do. Also getting scrappy. With a luxury brand, being scrappy isn't usually something that we like to do because we have a certain level of standards that we're trying to meet, but there is a small opening there to try some things where people are focused other places and leverage that. So my message is always just hang in there. But I think that there's just as many people travel or we have people in our homes right now. And so we kind of work on a day-to-day basis. So it's not as felt as much at the team level.
I feel like, Melanie, we've been saying just hang in there for 4 years.
Yes, ma'am.
Yeah, be scrappy doesn't feel like it's on brand for a luxury travel. Gotta be honest there.
How to explain sometimes.
Yeah, exactly. I'm sure. All right, well, let's take just a couple questions here before we wrap up. Somebody asked, how are you thinking about your marketing budget and planning spend going into 2023? I promise you that was not somebody from a good way or anything like that, but curious, what do the spend numbers, what does it kind of look like for you, and how does it compare? Melanie, we'll start with you.
Okay. In terms of, it's hard for me to think about tomorrow, much less next year, but I mean, at the very least, we still are in a growth mode at Inspirato. And so to continue to grow, you need more people, and more people need to know about your brand. And so I am thinking aggressively about budgets. Am I planning on going in asking for triple the budget this year? No, not at all. But it's certainly, I think that there is a strong argument, especially coming off of a softer third and fourth quarter in terms of pressure in the market. There is a reason to go out strong. There's always a reason to go out strong in the first quarter with travel, but I think next year, if we're going to be softer now, it's really important. So I intend to put together a plan that meets our lead goals and our conversion goals, as well as our awareness goals, because there is this weird trickle down effect. I mean, a lot of our leads sometimes that convert, they didn't hear about us yesterday. Sometimes it's 2 years ago. And so we have a very rich database, and to continue to cultivate that really requires a strong brand in the market, not to mention the competitive pressure that is always changing. I think that the hotel industry in particular has really doubled down, and then everybody thinks they can be a vacation rental now. And setting those expectations on how we're differentiated is just really important so we don't get lost in the mix.
Okay. All right. Corey?
Can I just say everything Melanie said, but minus the hotel part? I'm just going to say that.
Okay. Everybody's going to be a real estate agent. I mean, you can just swap that in and out.
No, that was really on point, Melanie. I think that like you can't be too conservative with it, right? If you plan too conservatively and you undershoot, then what do you have? So we're doing honestly a lot like Melanie said. I'm going to plan for 2023 as if it were a stable, solid housing market, and I'm going to again lead with those UVPs. I think Melanie said something key earlier too about how the digital landscape is changing and cookies and things like that. I've got a good digital team that's constantly watching that, and that seems to be a moving point for us, as I'm sure it is with everybody, right? And so that spend is always a little dicey, but I'm going to go into 2023 thinking this housing market needed to and will level off, and it's still going to be great.
So I've got a member of the team here. He's got a line that I love. He says it all the time, and I'm just kind of curious if it resonates or it kind of encapsulates a little bit of what I heard each of you both say. And the line is, he says, they've got money, they don't have budget, right? And the idea is that they're kind of like, it's not that there is a pullback. There is like it's right now we know we still need to spend to support the business, to accomplish the KPIs, drive the metrics we need to, run the programs that we have to that are going to be core to us, that regardless of environment still have to take place. But I don't have budget because right now I'm really trying to dissect and get surgical about what are those key things we want to test and try because we expect that they'll have kind of an outsized return. Because you both said that, and of course it's maybe a classic business development guy's line, but yeah, we like to kind of reference that. It's kind of what I heard you both say is, look, we've got money as we think about 2023. We're just trying to figure out how we budget that and what ultimately we try to execute against. So I don't know, maybe not, but that's
yeah,
what
no,
I
think that's good. And I think that's why I said earlier, like, I think watching some of the budget cuts happen weren't necessarily a bad thing, because for my company, Melanie, what did you say? We have a very energetic CEO too. But he, when we have money, he loves to spend it. And we've, when pockets are fat, things happen. And so these are the times where you, like you said, Adam's very surgical about our budgets and what we're doing. And so I like it because it keeps our focus on what's really important and what's ahead. And that's what I'm going to be looking at 2023. Again, like Melanie, I'm not going to go in and ask for 4 more staff members. But I want to make sure that spend is absolutely in the right place. And then I'll have a second tier of like, this is what we'd love to do. This is what we want to do. And so if the market, it does indeed look good in 2023, let's add on in tiers and let's do this and let's add a little bit more spend here and there where we think it really matters.
You both have mentioned energetic CEOs. And you both sit, I imagine, in the boardroom and in those board meetings and things like that. And I'm curious, where now does it fall on the agenda when the board comes together in terms of talking about marketing and how marketing is a catalyst and the driver of where we're at, or is it lower on the list? I'm just curious how that kind of looks from the agenda perspective, if that makes sense.
You get to go first.
Yes, Corey, sorry, back to you, true.
And maybe it's just my background. I worked a little bit in PR media relations early in my career, and that seemed to be the first one that was just kind of pushed aside. Now with the way integrated marketing is now, we've risen to the top again. And it's really been like we've got to get the word out, we've got to get messaging, we've got to do. And so it's certainly like pressure, but they're really looking to the marketing team right now to lead the charge. I think that's because, again, it's a 3-6 month looking at the market versus what kind of tech tool could we build in the next 2 years or integrate in the next 2 years that's going to make a difference. So marketing is the immediacy of like, we've got to get the word out, we've got to get the messaging right, like, so it's the marketing team. So we've really risen to the top, which has been a lot more work and a little bit more pressure, but again, this is our time to prove ourselves. So
yeah. That's great. What about on your side, Melanie?
I think that when it comes to budgets, we're at the top of the conversation, as you mentioned earlier. But I do think
so maybe more of the financial lens of the budget.
We're at the top of all conversations, the budget cuts.
Right. Yeah. I think that there is an understanding of the importance, but we have a lot of operational things. So I wouldn't say marketing is number one. I think that operating the business and both, because we basically have 3 areas of revenue, and getting people to renew is a big part of that. So that requires a really good experience. So we're very focused on investing in the consumer experience within Inspirato as well. And so I wouldn't say, and we obviously have a place in the home as well, like how the brand comes through in the home. But I would say that we're probably in the middle. Like it's not number one just because of that just the high touch business that we're in.
Yeah. Okay. Ladies, we are coming up on our time. I told you you'd get a couple minutes back, so you hopefully get to get a glass of water before your next Zoom meeting. Thank you both so much for being here. I imagine after this, you're going to get plenty of LinkedIn requests and follows and things like that. But truly, from all of Goodway and everybody that's listening in, thank you for being a part of this. We appreciate it. We appreciate the two of you and the work we get to do on certain things. So thank you. And yeah, we'll follow up with both of you soon. And thanks for the time today.
Thank you for having me.
Yeah, appreciate it. Thanks, guys.
All right. Thanks,
Have a
everyone.
good day.